We just ran, I just ran downstairs, everybody, to be with you. Let me catch my breath. Let me clear my throat. Who sang that song? Let me clear my throat. That was a club anthem back in the day. Man, what's up, guys? What's going on? I'm happy to be with you all again. Hey, speaking of back in the day, check this out. We're going to get into all 638 dividend increases that you need to see, and we're only going to spend like 5 or 6 minutes on each of them. So hopefully we'll be out of here by midnight. But no, we've only got a handful of them. And there was a bunch of them out there this week that we're going to talk about. Still catching that breath. And yeah, anyway, before we get going, guys, Shamir, right off the bat, NSC, Norfolk Southern, I sold them. If you remember, I did some tax loss harvesting on 3M because I think we're going to see a better price on them. I think that they're going to definitely be coming down once the news litigation starts hitting. But man, with Norfolk Southern and CEO Shaw, I forget his first name, not happy with how they handled that, especially skipping that town hall. Like I said, just show up with a bag of thank yous, or show up with a bag of we're sorries. We're going to look into it. We'll take care of you guys. Take all the anger that's coming after them. If you guys don't know, there was a train derailment and there was toxic chemical that was spilled and they had to burn it off. And people are getting conflicting reports of what's going on. And then from what I understand, there was another train derailment by Norfolk Southern I don't think it was Michigan. I don't think they go up there. I don't know. Do you guys know where that second train derailment was? But anyway, I wasn't happy that they skipped the town hall meeting, and they've been kind of I don't like it. I don't like it at all. So for me personally, I got out. I made a few bucks profit on them. And I've been buying more Algoma steel, ticker ASTL. If you saw the last, I threw it up on YouTube, the podcast video. But anyway, I want to show you guys something really cool that I came across before we get into the dividend increases. Yeah, I see you down there, Shamir, what you're saying. Check this out. So if you guys are horror movie fans, which I'm a horror movie fan, we have this coming out, this gem right here. It's going to be Winnie the Pooh, Blood and Honey. So what it is and what happened, if you guys don't know, that is Winnie the Pooh. And they were able to get away with this because of the copyright protection, the patent protection. It has completely evaporated for Winnie the Pooh. So it lasts for 95 years. And let me put myself down here. So it lasts for 95 years. And what happened is it ran out. And there's going to be some big names that are also going to be changing out there. It's going to be I think Tigger was in 2028. Winnie the Pooh, they can't show Winnie the Pooh in the red shirt because that started in 1932. So Winnie the Pooh was pretty much nude until 32. So this Pooh has got to be nude. The horror one, he's terrorizing a group of young women. I understand, a cabin of women. But interestingly, this ties into some of the companies we know and love, like Disney, because let me get out of here. Because patent, it's going to expire in the next decade for Batman, for Superman. Steamboat Willie is January 1st of 2024. So you and I could make a movie about Steamboat Willie going on a murderous rampage, use the name, use the likeness, and it ain't going to be a dang thing that Disney can do about it. So I think the Batman and Superman ones are going to be interesting. I think Bambi also already did. And Bugs Bunny, that's another one that's going to be expiring in the next decade. But, oh, really? I did not know this. Look at that. Shamir says James Bond is going to be the literary one running out. And for all those you might feel bad for Disney, they've made a killing off of Beauty and the Beast. These were from like 16th, 17th century novels and whatnot that those ran out. Beauty and the Beast, Sleeping Beauty, Aladdin, so it goes through, it's just cycles in history, but it's going to be really interesting to see probably 10 years from now, well, all the crazy stuff that we're going to see Batman, Bugs Bunny, and Superman doing. But I'm waiting for Batman versus zombies. That one's going to be cool. All right, so enough of that stuff. That's a little bit of fun thing. Maybe I'll start these off while we're getting warmed up instead of just jumping right in. Just some fun little thing that ties into investing or the companies that we know and love. Sorry, checking my voice there because I'm a paranoid lunatic. Don't want to say that. All right, here we go. So we're going to go through some of these dividend increases we got here. First one, check it out. Fizz. I wanted to say Fiserv. I know it's not Fiserv, obviously, but it's a data processing and outsourcing company. Raise that dividend 11%. Let me know what you guys think of these. I'll be keeping an eye on the comment there. Oh, Joe, by the way, I'll get back to that comment, Joe, and we'll touch on MPW as well. I'd love to know your guys' thoughts on MPW. Did my newsletter last night and messing myself up with my voice. Did my newsletter last night, got it out this morning, and it was pretty much on Medical Properties Trust. Really interesting stuff on MPW. So let's move it along here. Exelon bumped that dividend 6.7%. Here in Chicago, they are the parent company of ComEd, Commonwealth Edison, not to be confused with ConEd, Consolidated Edison, which is out there in East Coast, New York area. They raised that dividend 6.7%. Let me guys know if you own any of these. Give a shout out, whatever you want to say. TC Energy, way up there in Canada, hey? Way up there in Canada, eh? They grew their dividend 3.3%. Little increase, but look at that, 6.61% yield. And by the way, those of you watching on replay, if you want to read any of this, if we're going too fast, dude, you can just pause the video. No big deal, no worries. PSEG, they are a New Jersey utility company, raised their dividend 5.6%. Hercules, Darth Dividend, dude, check out his channel, Darth Dividend. I know he invests in Hercules. They are similar to Main Street Capital. They're similar to another BDC I invest in, which is stalling. Come on, brain, you can do it. Which is Ares Capital Corporation, ticker ARCC. See, we got it, man. We need more fish oil to lubricate the gears, I guess. Realty Income, dude. I'm like, another dividend increase for Realty Income, 119th since 1994. They raise that dividend every quarter, and they're finally over 25 cents a quarter. So until the next quarter, when we see another raise. ADI, company that I said looks like they stole, they jackbooted. They stole YouTube's logo. Look at that. The creative people. Well, I think ADI, obviously they've been paying a dividend for 20 years. YouTube, no, it hasn't been around for 20 years, has it? Interestingly. So I'm guessing YouTube stole the logo from ADI and said, hey, just paint the black red. We got it. Nothing to see there. Railroad company CSX gave their 10% increase. Really nice. 19th straight year of dividend increases for CSX. Sherwin-Williams. Dude, I said we need Ben Franklin's, one of his microscopes to see this increase. Just little microscopic raise. So I haven't looked into that. I'd be interested to see what's going there. Yeah. How much do you guys owe? If you own you got, I think it's a federal law that if you don't invest in you can't call yourself a dividend growth investor. Just saying, I don't know. Comments on which ones are also undervalued. John, I couldn't because I didn't write that down, and it would take us forever to see which ones are. But I'll tell you, Sherwin-Williams is not. They're usually at a premium. I'd say Realty Income. Wrong way. Realty Income is. It's probably a little bit over fair value, a slight premium on them. Cisco, I've sold them too soon. I had a really strong dividend overlap on Cisco, and you guys know that I sold them because I didn't want exposure in just everywhere. So I should have waited a little bit, but they bumped up. So 2.6% increase on Cisco. I think Shamir, don't you own MFC Manulife? They're a Canadian-based insurance company. I think Shamir, shout out if you do, Shamir. Coca-Cola, dude. You know them, you love them. Coca-Cola, only a 4.5% increase. So kind of funny that PepsiCo gave that 10% dividend increase, and but Coke has a much lower payout ratio. So we're keeping an eye on that. So 61 years of consecutive increases for Coke. Just safe. I don't think that dividend's going anywhere. Extra space storage, 8% increase, 13 straight years of growth. I was thinking about going into extra space storage. Guys know I started Life Storage. Big fan of Life Storage, which, by the way, I just did some work at a Life Storage, and I watched a FedEx driver bring a package in, go into a locker, drop it off, and leave. That's their dude in action. I was thinking of the old football cards in action. They show the players. That was in action. Their warehouse anywhere. What Life Storage? It's kind of unique to them, trying to use some of those units in their facilities as like a last mile. Meaning, like, how do you explain the last mile? Last mile is the final step, kind of from warehouse to a delivery truck to your doorstep, or to the business, the end user of it. Like that's last mile. Yeah, looking at your guys' comments. Okay. Yeah, Shamir does have MFC. Nice. So there you go. You got to raise. Anyway, so Public Storage raised their dividend 50%. They made a lowball offer to Life Storage, an unsolicited offer, trying to, they call it hostile, but I think unsolicited might be a little more apropos. And they turned it down. I think PSA is going to come back. They're not done. Casey had said that was just and I agree, just a price anchoring, just to make it feel like now the next offer is going to be like, whoa, like that's probably more in line with what they really wanted to do. So Rivian electric vans, I don't know, John. I haven't looked into that. All right, a couple more here. A couple more payout raises to get through. What do we got? NextEra, never on sale, 10% increase. That's their 28th straight raise. Allstate, this is a company that I don't outright own. And I know Allstate and Aflac have always looked interesting to me. Interestingly enough, if you guys don't know, a little bit of fun trivia, Allstate was spun out of Sears. So Sears had owned Allstate, unlocked shareholder value in a massive way. Why? Well, Sears is not really around any longer, are they? Does anyone know who acquired Sears? I forget. Somebody acquired their brand, I think, acquired the name for pennies on the dollar. But either way, Sears, once upon a time, dude, as a kid, I used to love the Sears Wish Book. That was some cool memories. Sears was kind of like, kind of like the Walmart bag or the Amazon. I mean, you could get everything there, but I think it was a team effort of Target, Walmart, Sam's Club, and Amazon all just made Sears go away. But yeah, so anyway, Allstate was spun out of Sears. So imagine if somebody received the shares of Allstate, the spinoff shares, and they're like, I don't want insurance, I want Sears, and they just sold it. Well, that would have been a good deal to hold on to Sears now. This is a Warren Buffett stock. They added a little... Okay, brain, slow down. Let the mouth catch up. They added a little bit more. Louisiana Pacific. They are lumber, I believe, right? Just a lumber company. Somebody correct me on that if I'm completely wrong and way off base. Brunswick raised their dividend 9.6%. I know Ryan covered a bunch of these in his live stream. A couple more. Humana, 12.4% dividend increase. I don't own them. Reliance Steel, dude, 14.3% dividend increase for Reliance Steel. So that's one point. You can see there 1.71% forward yield. So not really that big. Couple more. This one I want you guys to pay attention to because Blue Owl raised their dividend 8.3% to 13 cents. So why did I, out of all these, put Blue Owl? Well, very interestingly, if you guys remember Store Capital, ticker STOR, that was a Buffett pick. That's when they got on my radar, is when Buffett bought Store Capital, or we should say Berkshire. Usually they don't buy REITs, but that was a REIT that Berkshire did hold. Well, if you remember right here, Oak Street and GIC, which is a Singaporean company, if memory serves, they bought Store Capital. Well, who owns Oak Street, which is, by the way, that's here in Chicago. Oak Street is owned by Blue Owl. So there you go. If you still wanted to feel like you're getting Store Capital dividends, you would go to Oak Street. And the last and not least, the big Mamba Jamma, big 19.6% dividend increase for Old Texas Roadhouse, which I haven't eaten at one. Shout out, let us know in the comments to the side or wherever you're looking at this. If you've gone to Texas Roadhouse, do you like Texas Roadhouse? What do you think? So that's it. Those are your dividend increases. Everybody. Now I want to get to these comments. I saw a couple interesting ones. By the way, let us know something you've bought. What are your thoughts on MPW, Medical Properties Trust? Oh, no, I know what I didn't show you, people. If you want to look at all the dividend increases for free, this is where you're going to go. So I have a link in the description below. You're going to go to Market Beat. So they have them all here. It's their recent dividend increases. You can search. Dude, they love the give. They are all about the ads at Market Beat. You'll get tons of pop-ups. Yeah, so you can search a lot of different things and increase amount, like Equity Commonwealth raised that dividend 325%. And you can see some of these I pulled. So some were from Simply Safe. I didn't put Harley Davidson raised their dividend almost 5%, which probably should have went there. So yeah, just there's a ton of them. I mean, look here, watch. I'll just go fast. Just there is a ton of dividend raises. So go through those at your leisure. And yeah, I just wanted to show you guys a real simple, easy place that you can, look at dividend increases if you want, or just come and check out YouTube channels that do dividend increases that you need to know about. Should have been more forceful with that title, right? If you don't know about these dividend increases, you'll go broke. Yeah, you guys, okay, here. So, hey, I want to give a shout out to Amber. What's up? You're an American temporarily living in the UK. We're happy to have you. And how is it over there? Have you been to Dublin? Because yesterday morning, my wife and I were planning out hotels. We're going to be in, plan is to go Dublin, check out Waterford South, go on over to Killarney, Christmas in Killarney, when all of the idiots are home, and then go up to Galway and then back over to Dublin, kind of do an 8-day Southern Ireland tour. But my Lord, is Dublin expensive. So Joe, yeah, on MPW, Joe, are you Professor Joe? I don't remember. If you're not Professor Joe, that's okay. Yeah. So on the latest newsletter, and I left it up here, Edwin Dorsey does the Bear Cave. And it's a short, basically, man, it's what shorts are all about. Right here, you can get the free newsletter. The latest one just came out, this number 157, 3 hours ago. There we go. Let me take you off the screen here, Joe, with your comment. So, yeah, the Bear Cave here, they're all about the shorts. And what the shorts want to know is what companies could potentially be dropping, going down, where are their problems. So they have a Viceroy Research is a company that I guess they call them short reports, right? So they did a very interesting in-depth on MPW. So you can see here, this is just, you can get this in email or just go to Bear Cave. They'll go through recent resignations, like the CEO of Bally's entered into a separation agreement. And it doesn't necessarily mean it's a bad thing. It's just interesting that they talk about. But right here, Viceroy Research, and there are multiple case studies. So I gave links inside of the newsletter so you guys can check out all of that. But it just brings you to their Twitter page, and then they have their own page. But anyway, so yeah, check them out. If you're interested in MPW, it looks like there's some shenanigans going on where, in a nutshell, it looks like they're overpaying to tenants and then charging more. And it's like a circle of getting that money back is, from what I understand it. I've been digging into it. I gave a really quick and brief explanation in the newsletter about that. So, I was on, it was, what made me think of it was Ryan's live stream. I was driving home from work Friday night, and I think I saw a couple people in his chat say that they were buying MPW. So just a word of caution. It could be completely a nothing burger, as they say, but I ended and I said, where there's smoke, there may be shenanigans. So it's just something to be aware of if you do own MPW. Oh yeah, Eric, we were talking about the the blood and honey from Winnie the Pooh, because if you're just joining us, the copyright or the patent ran out, the patent protection there for 95 years. I'd like to know how long that's, been a thing, but the patent protection ran out on the original iteration of Winnie the Pooh when he was nude, and he started wearing a shirt, the red shirt, in 1932. So you're not going to see anything with the red shirt, Pooh. But hey, if he was, if he had a white shirt on and it got covered in blood, does that count? That's for the lawyers to figure out. Yeah, buying J&J. I'm still waiting. What are you guys doing? If you put it in the comments, I'll get to it. But yeah, I still think that J&J and 3M have a ways down further to go, but it's not going to be until the litigation news hits and we get a clearer picture of what that's kind of going to look like, because it's just, it hasn't happened yet. I don't think it's baked in because there's so many big ranges of what we're hearing that the talcum powder. So if you guys missed it, the court blocked the Texas two-step maneuver by Johnson & Johnson, meaning that they wanted to put all the talc liabilities into a new company, so basically a spin-off company, and then fund it with, I think, like a $2 billion or $3 billion trust, whatever it was. They'll fund it with a trust and then immediately file for bankruptcy. So the litigants, I don't know if that's the right word, I don't know, the litigants, I guess, they can file claims and they can sue the hell out of that spin-off entity, but you can't go after Johnson & Johnson because all the talc liabilities reside in that spin-off entity. So there's a cap on what it can be hit for. But right now, the judge, they blocked it. So J&J, the big parent company, is now, I guess, exposed to litigation from the talc. And earlier 3M tried to do that with their earplug liabilities, but that was blocked too. So very interesting. We'll see what's going to happen with that. And I think once news starts coming out, then we'll see weak hands panic. We've seen some weak hands get out, but I'm looking to buy J&J closer to 150 a share, hopefully lower, and 3M underneath 100. I was talking with Casey, and she thinks that 3M could be in the 60s, and I was like, hey, great, I'll be buying there too. All right, what do you guys got here? Oh, John wanted to know, I think we touched on that, why J&J shares dropped. Now, it's not from the split, which, Shamir, thank you. I still have to get to that S1 from Kenvue, which is going to be the spinoff company. For those of you that don't know, Johnson & Johnson in the later or the end of 2023, the end of this year, are going to be separating into two different stock tickers, two different businesses. The one business, I guess, will just remain Johnson & Johnson. It will be the pharmaceuticals and the medical devices. And then they are spinning off into Kenvue, the consumer health products. So that's just all the consumer-facing products that you're going to see in like Walgreens and Walmart. And they sell stuff to get, you can take care of that Walmart Blackfoot if you got it. I don't even know what the Walmart Blackfoot is. I just heard somebody use that years ago. People in Walmart without shoes, don't they have a sign there that says you can't come in without shoes or shirt or Speedos on? Okay, so yeah, John, I don't think it has anything to do with the split. And a lot of times, as we saw with Allstate, man, the split can do much better than the parent. So the child can do better than the parent company. Let's see. Yeah, the talc bankruptcy block. Okay, so we already talked about it. You guys have already covered this stuff. So let me move down. Oh, look at that. Fancy schmancy. Simply Safe not show that. Undervalued, no, they don't show undervalued. What Simply Safe will show is how, here, well, since we're talking about J&J, come on, everybody. I still don't have that traveling music yet for, I don't know, for this, when I go to, let me share the entire screen here. All right, so my portfolio, J&J, let's bring up J&J. Johnson & Johnson. Is that big enough? I think that's big enough. Let me hide your comment here. Sorry, everybody, to bring you back here. You can see behind baseball and how I put it back on. You can see how it works. If that doesn't screw at your eyes, I don't know what will. So, yeah, what they'll show here, they give the dividend rating. You can see my shares. I currently have it in 2 accounts, and I have 33 shares just outright. I also have exposure to J&J in mutual funds and whatnot. But my yield on cost, 3%, $149 per share is what that is. But what they will show, yeah, so they give their notes. It says there will be no setback on the dividend. Yeah, they give 107 years they've been paying that dividend for. But what I did want to show you that, when do they go next? February 17th. I didn't realize that. That was a couple days ago. Friday. Man, I didn't realize they went ex-dividend Friday. Well, that would explain why at least the share price, $1.13 opened up low, and they're getting ready for another dividend increase here in the spring. But if you can see this, yeesh. So what Simply Safe will do, which is kind of nice, is they'll show the dividend yield compared to the 5-year average, where right now it's 7% above the 5-year average of 2.64, and then the forward PE is below. So, it's probably not a bad spot to add. But again, these numbers are all they are all lagging numbers. But what you were thinking of is another service I pay for is good old Alpha Spread, where they do give intrinsic valuations. So the base case intrinsic valuation that they give here is $135.12. And if you do a worst case scenario, 5 years of negative growth in a nutshell, $114 for J&J. So those are your numbers on that. And a lot of times some big investors will look for a 10% margin of safety below that worst case intrinsic valuation. And again, remember, intrinsic valuation is just a range. I like that. It's just a range. There's no exact number. It's not like you're going to go out 4 decimal places to get an exact number for an intrinsic valuation. It could be a 10% margin. It's like we say somebody needs to lose weight without knowing exactly how much they weigh. So that's what is the deal with that. Fancy. Hey, look at that. So Chris, what up, Chris? What up, Chris? He bought some J&J on the dip. Nice. I like it, guys. And let's see. I need a sip here. Un momento, por favor. Necesito somebody tell me how to say sip. I don't know that. No sé la palabra para I don't know the word for sip. Sorry if you're listening with earbuds and that pop blew them out. We don't want to do that. Are your ears ringing? My ears are ringing. Let's see. Yeah, look at you. You guys are way ahead of me. I'm just gonna let you guys in the chat talk. Yeah. So again, and I don't think I finished saying it, or did I? That when a company goes ex dividend, so on that ex dividend date, like we saw with J&J, on the 17th, their share price will open up down $1.13 to reflect the payout of that dividend. So, and that goes for special payments too, or special dividends as well. But yeah. Also, interestingly enough, I see, John, you're mentioning 3M, that 3M is also going to be spinning off their consumer health. So a lot of companies spinning off consumer health, and Unilever wanted to buy. Do you guys remember that? Unilever wanted to buy GlaxoSmithKline's, right? Consumer health products, which I think I think GSK and Pfizer have like a joint ownership of the consumer health products over at Glaxo. Let's see, what else are you guys saying here? Yeah, I don't have any thoughts on this, on the Rivian electric vans. You know, and this is part of my evolution is I don't want to rule out non-dividend stocks, but it's hard because a lot of us get caught up. I don't know about you, but a lot of us get caught up in this just wanting to build that patty, that projected annual dividend income patty, not Patty O'Shea. We want to build that patty up, and I turn blind eyes toward companies that don't pay a dividend, and that's probably not a good way to invest, because then you're guaranteeing you'll miss out on some really big movers just because they don't pay a dividend. But let's see. Oh, we were talking about Sears. Yeah, Eddie Lampert, he ruined Sears. That's an interesting story. I have heard about Eddie Lampert. He didn't want to. Do you guys remember that? I think he didn't want to change like fixtures and carpeting, and he just. Oh, wasn't there a bit of fraud in that too? Let's see, Shamir in Canada. Canada. Let's see, Sears with Eaton's with the catalog. Yeah. You guys still have them? Yeah, they bought Sears and Kmart. Kind of like, speaking of bankruptcies, what about Toys R Us? Dude, I loved Toys R Us as a kid. Like, that was my Valhalla. That was my heaven. But I think it was an issue with the debt, right? There was something with debt where they couldn't, I don't remember. I shouldn't speak on it. Here we go. Eric, he ate at Texas Roadhouse last night. Well, for all of you that invest in Texas Roadhouse, send Eric a thank you, which I guess I do, you know. Let's see. Well, that's good to hear then. You know what? There's Eric. He's our boots on the ground for Texas Roadhouse. Let's see. Oh, interesting. So, Coyote, do you have any concerns at all regarding the Viceroy short report on MPW and their round tripping revenues is what they're doing, where they're just moving money around to make it look like they have increased their earnings or profitability, their profitability. We're trying to go like Snow here with my flow. Don't interrupt me as I go. Snow, he was from what, the ghetto of the ghetto of Toronto, I think he said. What were we talking about? MPW. Yeah, Coyote, do you have any concerns? I'm going to try and get cut up here because I want him to. Yeah, Kevin, you made it. What's up, man? All right. I'm going to kind of blow through some of these. Ireland hasn't been to Amber yet. This is what happens when you're talking and reading and thinking and your brain goes too fast. Different Joe. There's Professor Joe. We got Joe Schneider. Look, dude, it's raining Joes around here. I'm going to get caught up with you guys. Good. I'm glad you, yeah, Jim, really interesting. And, you know, it's not to, I probably should have said that, not to scare people, but it literally is, it caught my attention. It's like, hey, this This one group is just waving the flag saying like, "Hey, red flag, there is fraud going on here." So I think the least you could do is just look into what they're saying and then see if you think it makes sense, and then listen to what MPW has to say in their defense, which I didn't really see if they answered those allegations. I'm sure they're going to deny them, obviously. Yeah, we're gonna check out the cliffs of Mohair. Mohair. Steve, I did see your email. I didn't get to it yet. Thinking of buying KRC. That'll make Mr. Ryan Williams happy. Yeah, Joe's been picking up MPW. Yeah, I'd love to know what you guys think about medical properties. Are you concerned at all? Do you think? And this is the thing too. You got to pay attention and think about with the short reports is they make their money on I guess putting out information that's negative about companies. So it's kind of a cool thing that, yeah, they make money when companies go down, but they're trying to get in on these companies before they go down. So they're doing due diligence, trying to point out the companies that may have problems that are just about to come on the horizon and into the news. And when that happens, the weak hands get out and everyone sells and they make a lot of money. So there's short reports where they've not been on the up to snuff. They've tried to tank companies by blowing something out of proportion and getting people to sell. So, interesting, Kevin. Yeah. And again, I've never owned MPW outright. That's interesting. Very interesting. Let's see. Oh, yeah, Shamir, I was, dude. that's why I wasn't typing a lot. So, I did a little bit of text, voice to text, which didn't work out so well. And yeah, it's okay. I mean, I just wasn't, it was fun. I joined all you guys. I was listening. The Cliffs of Mohair. Nice. Yeah, we're going to check it out. Here we go. KC in the house. We need a special thing to play. Rationale is price. No. Yeah. And I've said I'm waiting on J&J at least for 150. That's when I'm probably going to get a few, and I'd love to see it later. But I mean, J&J always has that premium attached to it, No, I don't think you're missing anything. Okay, you guys are talking Canada. Let me see if I can get here for it. Yeah. Walmart killed them all. Dude, Walmart was the OG target, right? Or Amazon. Let's see. What else are you guys saying here? Okay. You guys are talking Canadian stores. I don't know what they are. I want to make it. Yay. Interesting. Steven thinks Kenview is going to do better than J&J. Yeah. And a lot of times that's why they call it unlocking the shareholder value, right? Because you can, well, it can go both ways. You know exactly what you're investing in. Whereas when it's a big conglomerate, you don't know how to, kind of like Brookfield Asset Management, they probably have a bunch of businesses that they could do spinoffs on. So yeah, wearing shoes in Walmart is a lot. Okay. Well, we don't want to get the Walmart Blackfoot. That's all I'm saying. Hashtag Walmart Blackfoot. The split unlocks a lot of value at Kenview and is a positive move. That's interesting. I'm probably going to add more Kenview just for the simple fact that, as Casey and I have discussed, that I'm evolving and I just want businesses that I can understand. And I've been way, way guilty. And it's something you learn as you're new and a beginner and growing, that you see other people buying Intel. You got to buy Intel. Huge buy rating on Intel. Buy Intel. Well, technically, that's somebody else's conviction, and it may be right. It may be good news, and it may be accurate. But man, I think you're doing yourself a favor when you really understand a business, because otherwise, you're kind of just hoping, Okay, cool. Chris thinks that the talc lawsuits are overhyped, and in the long run, no. I think what's going to happen is it's going to be spread out over many years, like with the opioid settlements, where some of them were 20 years spread out. So Speedo, 100 for this vid. Boy, I don't know about that. Yeah. I could say yeah and just wear it over like, some shorts or something, but I'm board shorts, man. I'm board shorts all the way. My wife always said, can they do topless investing? I was like, yeah, I don't think I don't think that's gonna fly. That's a different kind of audience I'd be attracting. Um, all right, what did you say, Jim? When you go to Walmart, don't have what you need. Pajama, get dressed. Hey, shout out to Target. We just went there yesterday. I walked to Target. All right, here we go. 38,000 cases pending. Oof. Yeah, I agree, Casey. I agree. And it's gonna be ugly, and that's why I'm in no hurry to buy J&J right now. And I think once this news gets front and center, I think we're going to see a lot of weak hands just selling out, and I think there's going to be much better opportunities to get back in. And I'll be curious, dude. I still got to get to that Kenview S1. Let's see. Here we go. Answered my question. I love it. Sip is Golo. Thank you. Although, is that Espanol? Is that Spanish? Because I think your name looks Portuguese to me. Am I right? Is that a Portuguese name, Rui? I'd like to know. But anyway, so yeah, Kenview. Are you guys going to be buying Kenview? I think it's going to be a really easy business to understand with good old Kenview. All right, I'm getting caught up here. I'm going to get to, there we go. I knew it. Trago. Thank you. See, I could have looked that up. And I'm going to use it now. Un momento, por favor. Necesito un trago de agua. Yeah. Let's see. Did you cover what happens to J&J shareholders? I don't think that information is out yet. Shamir, I think you've read the Kenview S1. I don't know if they've released what the split ratio is going to be, but yeah, interesting. So John's talking if you'll get a choice, because we saw that with 3M when they spun off their, or not spun off, they merged and then spun off their food safety business. I don't remember the name of that company, but you got a choice if you wanted to get shares of that or just not at all. And most people didn't take it. I didn't want it. Let's see. Yeah, litigating. It's going to be expensive. It's going to be in the billions of dollars for J&J. That's definite, Casey. And I don't think it's going to bankrupt them, but yeah, it's going to definitely be. It's going to be an issue, and we'll see how J&J deals with it. But again, I'm just not in any rush to buy J&J. And I mean, honestly, where was I think I was buying them in the depths of the COVID crash, 120s, I think, or was that? Yeah, I think in the 120s I was buying them. There we go. HLN is the joint between GSK and PFE. Yeah, and that's what Pfizer. Unilever wanted to buy, and they were willing to overpay for it, and shareholders were not too happy, and their share price dipped a bit, quite a bit. More 3M. Interesting, Kevin. I'm waiting on 3M because I still think that their own problems, they have the 3, right? I think there's 3, although one is minor. They have the Forever Chemicals, the PFAS, the earplugs, and then I just plumb done forgot the last one. It'll hit me later. It'll hit me. Let's see. Non-divvy companies I would make an exception for. Yeah, I mean, Berkshire, obviously. I'm invested in Berkshire with, what was the one? No, they're not part of SCHD, are they? Are they part of SCHD? One of my Vanguard mutual funds is, so that's why I've never been in a hurry to like run out and buy Berkshire, because I have exposure to them. But, the Berk B, if it gets cheap enough, that might be nice. Nice. KC. This is my wing woman right here. So she'll cover it. If I don't know it, she'll cover it. I love it. Yeah, not saying they're under insolvency threat, but the talc issue is not a nothing burger. I didn't say it was a nothing burger. What did I say? I did use that word, though, which is funny, but I don't think I said it about that. Yeah, I hope so. Because honestly, I mean, I think J&J is going to persevere and keep going. If you guys missed it, if you want to know how Warren Buffett buys the pharmaceutical stocks, he doesn't know which drugs are going to be blockbusters, so they just wait. They wait for them to become cheap, and then they buy. And I think he used in the short I made Pfizer, Sanofi, J&J, Merck, those types of companies. Um, yeah, Cody, what's up, man? I'm not going to be watching the 500 because I don't really watch racing. Um, I go to the Indy 500 every year, but that's because my friend's aunt lives down in Indianapolis, so we spend the weekend down there. All right, you guys are talking more, J and J. 15 shares of PEP by end of year. I still think they're expensive, Kevin, and I don't know. I don't want to tell you to buy or to not buy, but I will say that I do remember distinctly buying PepsiCo around $142 a share and thinking this feels really overvalued. But look at it now, you know. Let's see, HLN. What else, you guys? What do you guys want to ask a question about? Is there anything you want looked up, or you enjoying this? You take the show where you want it to go. You let me know where you want to go with the show, and I'll try to. Can't think of any more rhyming words. Something I should work on. Yeah, I agree. When a company's facing, yeah, and super interesting point with Medicare. That's something too that Harsha, don't remember your last name, usually pops in, was talking about. Oh, I had to do this later because of volleyball. So volleyball schedule messes everything up, but I'm with you. But yeah, Harsha had talked about having concerns with some of the medical companies as well, because again, Medicare reimbursement, the government, what do they say? Camel's nose is under the tent. So we'll see. Yeah, J&J 1%. I think that's good. I mean, for me, it's let's see, I won't bring you guys along, but for me, it is, what do we got? J&J is 3.7% of my portfolio. So not terrible, but I would like to buy more down at lower prices. Reading what you guys say. Nice, Shamir. Thank you for what do you guys think of J&J? For those of you watching, yes, no, looking forward to Kenview. You're going to buy it. You're going to sell it when you get it. You're going to hold it. What else are you going to do with it? What are the other options? I'm going to put it in a pendant personally and wear it around my neck. It's going to be a little locket. It's a little flip locket, me and Kenview. My wife might not like that. Who's Kenview? It's from J&J. It's the child that J&J and I had together, and I love my Kenview. Let's see. Anyway, sorry. Start talking crazy, and the people watching are like, "I'm out. I don't know what you're saying anymore, guy. I only got time for this." Tough crowd. So the rate of divvy increases. I think they might slow it. Well, you know what? Good point, Shamir. This is going to be interesting because J&J has another divvy increase that's right around the corner. We're going to be curious to see if they're doing like 3M. I think 3M is really trying to preserve that. And, you know, they still want to hold on to that Dividend King title, and rightfully so. You know, they earned it. But so did VFC, VF Corp. What do they say? The safest dividend is the one that was just raised. And it's like, hey, VFC has entered the chat. If you don't know, they raised their dividend, and then the very next quarter they cut it. But yeah, I agree. I agree with you, John and Casey. I think it's still, it's getting closer to my buy point, but I really, really want to see under 150. So let's see. Yeah, and that's what I love. Hey, thank you, Kevin. I love it that Casey, you got your own conviction, and it's beautiful. It's a beautiful thing. Let's see. HLN will pay a dividend. Oh, that's right. It did spin off. I completely forgot about that. Thanks, Prof. Yeah, so Unilever wanted to buy it, and then they spun it off, right? Let's see. Yeah. Here, Amber. I wanted to highlight that. Yeah, all excellent points. I agree. Dude, Casey does her homework, knows what she's talking about. So whether you agree or not, At least you know it's somebody that has a very well researched and unique opinion, which you gotta like. You gotta respect that. Thank you. Hey, there's Harsha. Let's see. Yeah, the great commentator. I love it. Let's see. What's that noise? I don't know. That's my thinking noise. J&J has hit 155 or so a couple times. Okay. I think we're going to see it below. I really do. I really think we're going to see it below. Harsha says several folks are sitting on huge losses on Amazon. Interesting. Yeah, there's one. I've been looking at Amazon. That's one I thought about. I came really close when it was 80s. I think, what did it get to? Like 89, 88, somewhere around there. I wanted to add a few, but then, and that's something that I'm going to have to grow and overcome. I looked and I said, yeah, but they don't pay a dividend, and I have exposure to them in like mutual funds through Vanguard, through my 401k. So I just didn't feel the compulsion to buy them, but I guess for a trade, maybe, maybe for a swing trade. I don't know. But then it comes back to me saying like, I've done bad swing trading in the past. I just hold companies, but you could do worse than that. Russ Bucket. I don't know what's Russ Bucket? What did I do? Okay. I'm far behind, guys. Let's get caught up. Let's see. Amazon, some interesting wrinkles. Interesting. Yeah, I haven't really dug into Amazon too much. I would like to be. Russ is on right time for comments. That's funny. Being on this side of it, I will say that it's like you want to read every single comment and just engage and go over it real well. But then you get what happens here, and you'll see us. We're like 15 minutes behind. So I'll ask a question and then I'm answering it 10 minutes later. So that's funny. And I don't know what the solution is into the future, but as we continue to grow and get more people coming on, I guess I'll learn to see what you guys are chatting about with yourselves, which I love it, dude. I really love it. Scott's Miracle Grow, we've kind of touched on it before in past live streams, and they have issues. Casey might remember. Top of my head, I don't remember exactly what the issue with Scott's Miracle Grow was, but it was concerning enough that I did not want to invest in them. I'd have to look again. Got more Kenview, would be interesting to own. Yeah, generic brands and household consumer. It's all the consumer-facing products. And I think that would probably not really be right exposed to the Medicare reimbursement headwinds that we talked about. So that would be, I'm going to dig in this week. I'm going to do it. Shamir, I'm going to read the S1, and it's probably going to reinforce what I'm already thinking, but let's see. Kenview could get a PG premium. Maybe. I could see that. I could see that, Jay. I could see that. All right, you guys can read Casey's. I'm going to go back and read Casey's comment, but nice. I love it, is what I meant to say. So do read hers. Look up Wendy's, please. Yes, you're going to make me hungry, man. I think they look not too bad. We'll do Wendy's for you, Mr. Shamir. Let's see. We'll do a quick, and if anybody wants to, pause the video, feel free to pause it, but I'll just see if anything jumps out. I'll kind of go and stop. Yeah, a little bit of cutting. Not the greatest dividend growth history, but yeah, 100% dividend increase last in January. That was big. I do remember seeing that. Yeah, from 12.5 cents to 25 cents a share. So they're paying $1 per year. And still, even with that, the dividend yield is 111% above the 5-year average. Forward PE below the 5-year average. Again, these are all lagging numbers. Don't tell us anything about the future. Here we go, guys. Here we go. Love it. So I'm going to refresh that. And while that's loading up, always a problem with Simply Safe. I don't know why. I'll get you the intrinsic valuation, then we'll pop back. Here we go. Let's see what they got an intrinsic valuation of Wendy's on. So alpha spread, 13% undervalued, $26. And a base case, or bear case, I'm sorry, worst case, $22.79. Current price, $22.90. So they say it's about fairly valued. And we pop back over here. So free cash flow payout ratio, 64%. I look at that more than the earnings. 78 cents of free cash per share. Again, I'm going to blow through this. You can pause it if you want, just because I want to get to caught up with the comments. Nice. Buying back shares still, 217 million outstanding. I like Wendy's. I don't think they're going anywhere. I don't really eat there much. Not a really high return on invested capital, though, only 6%. And return on equity could be influenced by debt. So let's see. Yeah, net debt, 89%. That is really high. That is one issue of concern. And then their interest coverage ratio is really low. That probably is enough to turn me off. And I'm not showing it. You son of a... Well, I'm sorry about that, guys. Here, I did it. I almost got through without doing it. Here we go. All right, I'm just going to go through again here. You guys got to watch me talk to a blank screen again. 50. You know, hey, we're getting better. There's the dividend growth. Again, you guys can pause this if you want. I'm just going to, you heard me jabber jaw about it. And I will get to the, let's see. We're going to get to the, again, pause this. If it's going too fast, don't worry. I wanted to get to that. So I think they have such a high return on equity at 38% there because that net debt is 89%. So yeah, and that's a low interest coverage ratio. And then here's the intrinsic valuations you can look at. So, all right, oh my gosh. We almost did it, guys. I don't know what I'm thinking. I'm going too fast. So I'm going to get caught up here. Immune from the talc litigation. No, it's not, Jim, because they had the Texas two-step, which is in a nutshell when they tried to spin off the talc liabilities into its own entity and then declare bankruptcy, and then they fund that entity with a multi-billion-dollar trust. That, yeah, Wendy's pays over 4%. I like their food too. Again, we don't eat there much, but almost 90% net debt. Yeah, that's thought. Yeah, I gave thoughts on SMG. Yeah, Wendy's did increase their dividend 100%. Yep. You guys are probably going to say I wasn't showing the screen. There we go. There we go. You know, and I got my phone sitting here too, but I'm just focused on you guys, trying to give you good content. The safety score was, you saw it. Let me see. It was 50. And I think it's because of the debt. That debt can, as we saw with VFC, debt can be a real issue. Yeah, so I don't know if Wendy's are all corporately owned. Okay, there we go. Shamir said they have franchises. Yeah, as far as Wendy's, I think I'd love to buy more McDonald's. I do believe that they are the world's biggest real estate company, right? I think so. I think they're the biggest real estate company. Hey, Kevin, what's up, man? They jumped on. So Wendy's, Kevin, do you know anything about MPW? I want to get your thoughts. Medical Properties Trust. Thumbs up, thumbs down, thumbs sideways. What do you think? Do you know anything about them? Do you invest in them? We spent a whole big long moment there chatting about MPW and how they might be round tripping revenues. So I'd be curious to hear that. And what did you guys think of the dividend increases? I mean, you know, maybe the first live stream of the month I could do that, or, you know, I could start them all off with that and then we could just talk about whatever. I mean, yeah, and McDonald's, I'm just going to look and see just for grins what they get an intrinsic valuation of. As we're waiting here, let's see. So alpha spread, $174. So they're about 35% overvalued. And on the worst case, 5 years of negative growth, they're given $153. So yeah, I'd like to see them come down a bit. Yeah, Kevin, interesting, man. Doesn't invest in MPW. I'm not going to. I think it's interesting that Coyote still continues to add them. And again, if you'd like to see that newsletter, you can sign up for it down below. And I should post the link to all the past issues. I shared it on Twitter, but yeah, again, down below. If you want my free ebook, by the way, I gotta pimp this mofo out, right? So I wrote a book for my girls' life, my brief thoughts on life, love, and investing. Really easy read, just sharing a lot of thoughts. You can't see that. All white pages. Wrote it kind of like a big Twitter post. And if you want that, free also below. We did it, dudes and dudettes. What were we called? The Dividend Dudes? I think we were called the Dividend Dudes once, Ryan and I. Which I like that. But I think there is a channel that's the Dividend Dudes. So I don't know. You know what, guys? I won't say it. We have ladies present. What I say on the podcast. It's a little crass, but it's not blatant. So I will say thanks for spending some of your time with me again. I really do appreciate it. Drop a line in the comments, wherever, any ideas, something you'd like to see, any questions, comments, or concerns you may have, share them. I'd love to hear it. And dude, I'll be back next week to do this again. And I will talk to you next week. So long, everybody. End the show. We could do it. Here we go.